I would like to begin my speech, first of all, by thanking ATMA, BSE, Mr. Sushil Kedia, Mr. Chauhan, and all the members of ATMA who have been kind enough to give me this opportunity to talk for the next 1 hour. I would like to begin my speech by following a very old Chinese proverb. You know, there's a very common saying in Chinese. It says that most of the battles are won or lost even before they are fought. What it basically means is that, you know, when we are in the markets and when we try to put a trade, most of the time, you know, the entire psychology behind basically putting the trade itself is made in such a manner that we can either lose the money or make the money even before we are actually putting the trade. Idea is, you know, it is already known at the back of your mind that, you know, whether the trade would be successful or not based upon, you know, whether your entries was right, whether your exit was right, but based upon, you know, what kind of work have you done behind taking that particular trade. What I'm trying to basically say is that, you know, going back to the Chinese proverb, if you're in a battlefield, all right, if you're in a battlefield, most of the time what happens is there are two ways of basically preparing for a battle. One is you enter into the battlefield and you don't know where the enemy is coming from, you don't know where the attack is going to happen from, and wherever it happens from, you're just there to basically replicate to that. The other way of basically preparing yourself for a battlefield is, even before you enter into the battlefield, you know exactly, you know, where your enemies are going to come from, what is the likelihood of the kind of weapons that you need to take along with you, what are the kinds of instruments you need, you know, if the enemy is coming from side A or side B. My dear friends, idea here is the same, that, you know, before you enter into a trade, before you actually enter into an investment strategy or a trading strategy, it is not just about the entry point. It is not just about the exit point. Because if you're looking at only the entry points and if you're looking at only the exit points, you're missing out on the larger picture of how to basically tackle the battlefield. All you're doing is basically trying to say that if the enemy comes from A, I'm going to attack him from here. Idea of basically amalgamating technicals plus statistics plus algo is to take this entire thing one step ahead and say that, you know, even before I take a trade, I know exactly what I'm going to do with this particular trade throughout the life cycle of the trade. From that, what I basically mean is that you know exactly that if market does A, I'm going to do B. If market does B, I'm going to do C. And these things are decided not after you take the position. These things are decided even before you enter into the position. Most of the time what happens is, after we enter into the position of a particular trade, more often than not, it is the psychology, it is the emotions, it is the M2M loss, it is the stop loss. These are the kind of things which starts guiding our discipline. And, you know, we would have taken the trade by getting entire gamut of technical analysis correct, entire gamut of rules-based things correct. But at the end of the day, you know, we fail. And the reason why we fail is we are not prepared for the consequences of what the market can do extra. Idea here of basically using statistics is to take that one step ahead and to tell you that, you know, what are the other things we really need to look into besides just the entries and the exits based upon technicals that can help us prepare for this entire battlefield so that, you know, we can win or lose, you know, the battle even before we basically go ahead and fight it, right? That's basically the idea. What I'll do is I'll just take the next 5 minutes of yours to help you understand you know, what algo trading is, because, you know, ultimately what I would do is make a bridge between technical analysis, which you are already aware of, statistics, and then basically take it to the algo trading front. Now, obviously, you know, all the people here would have a difference of opinion in terms of what really algo trading means. And I've been in this field for the last 10 years. To me, basically, you know, algos don't mean hi-fi computer systems, servers, co-locations, high-frequency trading. It doesn't mean any of these things. And if you think that, you know, algos are really for computer geeks, for people from IIT, for people from IIMs, and, you know, people who basically have got millions of dollars to invest, well, let me tell you, my friend, you are wrong. Idea here is, you know, algo trading basically just simply means having a set of rules and following them with discipline. Now, if you can have set of rules, you know, and I'm sure Mr. Vivek, I just happened to attend a session, you know, before mine. He had already explained so many rules regarding retracement levels, regarding, you know, triangle breakouts and things like that. So rules are always there, you know, they are always there. It will come from technicals, it will come from your entries, it will come from your exits. Idea is, once you have these rules, how can you make a complete end-to-end system which is not just about the rules? It is about the risk management, it is about the portfolio optimization, it is about using the right kind of statistics, it is about using the right kind of parameters which can just help you take that extra leap where you already know the technicals, but to convert that into a profitable part, right? That is basically where the difference lies. Again, coming back to the algo front, so rules. Now, as I said, again, a lot of people have these mental blockages that, oh, I don't know what kind of rules they are using, probably it's a black box. It's probably for, people who know a lot of formulas and things like that. But trust me, all of these rules, which basically some of the most, I would say, advanced or profitable algo systems in the world uses, most of these rules are simple rules. They are not complicated rules. So don't try and think that, when we are sitting behind our back and trying to make those computer programs for hours and hours and hours, we are trying to make something complicated. No. These are extremely simple rules, but executed to perfection. That is what is the whole idea. I'll give you a small example. Way back in 1980s, there's a company called Morgan Stanley. Right? It's a huge investment bank in US. They had a market-making division. You know what a market-making division is? Somebody who takes orders from the client and takes the other side of the trade and basically executes it in the market. So they had this market-making division, and they basically got an order to sell $100 million of General Motors in the market. So they were basically on the buying side. They bought it from the client, and they were supposed to sell $100 million worth of General Motors shares in the market. But after they got the entire shares and they started offloading it in the market, the shares of General Motors started tanking down, and they were not able to offload it. So then came the problem as to, how do you really basically sell that? Some bright chap on the desk basically stood up and said that, look, if we cannot sell General Motors, let's start selling Ford. Ford and General Motors, they both belong to the same sector. So, if General Motors crashes down and Ford is still where it is, at some point in time, probably even Ford should start, moving down. So they did that, and they sold Ford. And whatever loss they made because of not being able to sell General Motors, they recovered that in the Ford Motors. This simple philosophy of two sectors moving together, two stocks moving together in the same sector, gave rise to something called as pair trading. Right? And from 1980 to 1987 stock market crash, Morgan Stanley made more than $15 billion just by doing simple rules-based pair trading, because not many people in the street knew about it. So the idea here is basically, these rules need not be complicated. Idea here is to use the rules, use them efficiently, and use them effectively. And that is what basically, algo trading means to me. Idea of using the computers is very simple. Human beings have got two portions of